This upcoming alt season just got a massive boost. The Trump administration just secured several key trade deals with partners around the world that's going to allow for the altcoin market to explode. Trillions of dollars are about to come flooding into the United States, driving up productivity, driving up growth, and subsequently driving up asset prices. In this video, I'm going to break down what those trade deals are, what they mean for your bags, and if you stick around to the end, I'm going to show you the secret sauce that allows you to make the connection between these trade deals and the altcoin market. If that sounds good to you, hit the like button below, and let's hop into today's video. Now, we know the Trump administration has been involved in trade negotiations with countries around the world, some of the bigger ones being Japan, Europe, and China. And recently, the trade deals with Japan and the European Union have resulted in trillions of dollars in CapEx funding for the United States. And so what CapEx means is capital expenditure. This is essentially money that's coming into the United States from overseas to help grow the US economy and to help grow the private sector. This is bullish for asset prices because it signals economic optimism and economic activity coming into the United States, growing the private sector, increasing GDP, and essentially resulting in a broad economic boom for the United States and subsequently the rest of the world. This is how societies get richer. And subsequently, this is how asset markets go higher. Because once people have more money, once people feel wealthier, once more productivity, more growth, more economic activity comes into the United States and subsequently the rest of the world, as tariff deals and trade deals get resolved and countries are allowed to trade more freely, more money will flow into risk assets because people feel riskier. People have more money. People have more optimism in the economy and they have more hope that their money is going to get them further. And nobody understands this more than Treasury Secretary Scott Bessent, who helped broker these deals. He's going to break down the CapEx coming into the United States. 1 minute, let's have a listen.
CapEx, after-tax return on capital, is how societies get richer. So what we are seeing, and perfect example of what's happening in President Trump's America, 4 weeks ago, I was in Pittsburgh, and President Trump announced the Nippon Steel U.S. Steel deal with the golden share. Nippon Steel is going to be doing a huge amount of CapEx in the Pittsburgh U.S. Steel facilities, and we're building out 3 more steel facilities. So that's old technology. Now we've got this AI boom that's incredible. Probably the CapEx being spent on that is $300 billion a year, 1% of GDP, and that's going to create a
pay down the debt too.
Pay down the debt, but it's going to create a productivity boom. So in the history of the United States, the railroads, the 1980s, the Reagan deregulation, the 1990s, the tech boom, I think that we could see growth and productivity well in excess of 3% for the coming years.
So we're going to see a surge in productivity here in the United States. More growth, more productivity, more GDP, higher asset prices. This is good for us as investors, obviously. One of the sectors that's going to see a lot of this CapEx funding is the industrial sector. And there's a connection here that I want you to pay attention to. On your screen, what you're seeing is the total crypto market cap and the XLI. What the XLI is, it's basically just a broad-based ETF showing you the performance of all the industrial companies in the S&P 500. And what you're seeing is the connection between the two. Right here, as one goes up, so does the other. As one comes down, so does the other. And then a sharp rise, a sharp rise. It's actually pretty tightly correlated. And that's not to say that these two are necessarily a one-to-one correlation. This is showing you that a rising tide lifts all boats. As one sector gets more money and is more profitable, so are other major sectors in the US economy. And with blockchain technology and the entire cryptoverse and stable coins coming online and really waking up Wall Street, I think that as more productivity and more growth comes into the US, we're going to see a commensurate growth in blockchain and crypto assets because this is a new technology, this is a new innovation, and you really can't have one without the other. Now, what we can also expect to see from increased investment into the industrial sector, what we can expect to see from a massive productivity surge is more jobs and higher wages. And I've got a 40-second clip here from Bessent's counselor, Joe Lavernia. He's going to break this down for you a little more. 40 seconds, have a look.
One is certainly getting America first. And then secondly is really making sure we've got, rising living standards, especially for Main Street, what we call blue collar workers. That's the B. that we're going to see rising real wages. We've seen that so far in President Trump's first 6 months, essentially running at the same pace we did in the first 6 months of Trump 1.0. No other president has had wage gains above 1% like we've seen so far in 25, or we saw back in 17. That's with data back to the 1960s. And the third piece, of course, is the CapEx comeback. Companies starting to invest as the reindustrialization takes place. That was in anticipation of the One Big Beautiful Bill passing.
And so again, as people have more jobs, as people are making more money, we're going to see the riskier assets perform better. Take a look at your screen. I'm going to show you the U.S. wage growth alongside the crypto market cap, excluding the top 10, so basically the altcoin market. What we're noticing here is a correlation. We're seeing as wage growth falls, so too do altcoins. When wage growth is increased, so too do altcoins. And we're seeing this pretty consistently. We've got this fall, we've got this fall, we've got this rise, we've got this rise. Now, why is that? This is because, again, as people have more money, as people feel wealthier, they're more likely to go further out on the risk curve. If I do not have enough money to eat, then I am unlikely to invest money into risk assets. If I am doing very well and I'm able to save money, then I'm more likely to invest in risk assets. It's actually pretty simple when you think about it. And this actually connects us to another big picture concept, the business cycle. If you want to learn more about that, have a look at our last video. I break this down in a little more detail. But the business cycle is essentially how wealthy do people feel, how good do people feel about their finances. And if you have a look on your screen, what we're seeing here again is the altcoin market here in black, and then this is the business cycle indicator here in red. So as this goes down, it means the business cycle is slowing, the economy is contracting, people don't have as much money, people don't feel as wealthy, people don't have as much extra capital to invest. And as it goes higher, the opposite is true. We have more money to invest. We feel wealthier. Again, we see the connection here. As this falls, as the business cycle tricks down, as people feel less wealthy, the altcoins also take a dive. And then as people feel more wealthy, altcoins rise because we have more money to invest. This is the concept here. This is really what we're trying to hone in on. And as investors, this is useful to us because it allows us to position ourselves properly. It allows us to position ourselves on the right side of market risk. If we know that bullish things are coming, if we know that CapEx is coming, if we know that a productivity surge is coming, if we know that wages are set to increase and jobs are set to increase, and we can see these connections here before our eyes, we can say to ourselves as investors, now's a good time to go risk on. Again, we take risk in markets. Nothing is guaranteed. We can pull up all the charts in the world and show all the correlations in the world. It doesn't take away the fact that we are still taking risk. We take risk in markets, but the key to winning in markets is being able to take the proper risk, to take risk at the right times, and to mitigate your downside potential. And so you say to yourself, look at all these bullish catalysts coming in front of me. Now's a good time to go in. Now's a good time to get into riskier assets. And again, I can't guarantee that your assets are going to go up, but I have a pretty good feeling that the entire market is going to go up as a result of these developments. And so this is the secret. This is what whales don't want you to know. They want you to be at the whims of the market. They don't want you to have the conviction to sit through the volatility. They want you to panic sell the dips, and they want you to FOMO buy the rips because they want to buy low and they want to sell high. Because the thing is, they need someone to sell to when the market is high. And they need someone to panic sell their bags when the market is low. That's the key to winning in this game. The key to winning in crypto is having the conviction necessary to sit through the volatility. We can see the trend, even just the majors of Bitcoin, Ethereum, Solana, and some of the new ones like Sui. I'm just going to name those. We can see the trend here. Crypto is gaining adoption. Crypto is the fastest adoption of technology in human history. And so you say to yourself as an investor, I feel very good about sitting in this asset, but you can't panic every time there's a 20, 30% dip. This is normal in crypto. The key to winning in this game is staying calm. The key to winning in this game is not making emotional decisions. It's making impassionate, data-driven decisions. And that's why I'm here. That's the secret they don't want you to know. Because again, they need someone to sell to when the market is high, and they need someone to buy assets from when the market is low. Their goal is to buy low and to sell high. And through market manipulation, they take advantage of your emotions to get you to sell low and to buy high. And that's not what we want to do as investors, and it's not what I want for you. And so if you want to build conviction in this market, if you want to continue to be calm and dispassionate in this crypto bull run, make sure you subscribe to the channel down below. Leave a comment. Let me know what you've learned. And if you want to be a real supporter, hit the like button. It helps us more than you know, and we'll catch you in the next one.